Erica's there.
Starting the recording.
Erica's there, MJ?
Yes.
Good morning.
Good morning.
Good morning.
Hola.
Hola.
¿Cómo estás?
Muy bien, gracias. ¿Y ustedes?
Okay, folks, we're starting. Good morning and welcome to the basic bookkeeping webinar series for the Webinar Tuesdays at the Virgin Islands Small Business Development Center. My name is Mary Jo Williams, and I'll be your moderator for today's session. On behalf of our state director, I want to welcome you all here for the fifth and final session in this series. For those of you that are not familiar with the Small Business Development Center, we provide technical assistance for people that are thinking about starting a business, people that are in business and want to grow their business, and people that are in business and want to go out of business. So anywhere along that continuum, the Virgin Islands Small Business Development Center is available to assist you. The beautiful thing about that is there's no cost for our counseling services. The office in St. Croix is located in Estate Peters Rest next to the Sprint/T-Mobile office, and the office in St. Thomas is located on the second floor of Niski Center above the Navy and the Marine recruiting offices. Right now, we're seeing people online, we're seeing people by telephone conference, we're seeing people by Zoom. Unfortunately, we are not seeing people in our office at this time. So please register to become a client at our website. Send us an email at info@visbdc.org or call us and leave us a voicemail message, and we will get back to you as soon as possible. Now, today, like I said, we're in for the fifth and final session of our basic bookkeeping series, and our presenter extraordinaire, Ms. Carmen Acevedo Adams, is smiling because she'll be a free woman after today.
Yeah.
So let me give you a little background about Ms. Adams. Ms. Acevedo Adams has worked as a bookkeeper for over 25 years. Her clients range from restaurant owners, contractors, EDC companies, nonprofits, and homeowners associations. As a full charge bookkeeper, she has worked on accounts receivables, accounts payables, payroll taxes, monthly, quarterly, and yearly local and federal tax reports, posting of daily sales, bank reconciliations, and general journal entries. In 2016, Ms. Acevedo Adams started her own business as a full charge bookkeeper. She currently works as an independent business contractor for the VI Small Business Development Center, as well as an Spanish-English interpreter with local attorneys and other businesses. She loves what she's doing and truly enjoys helping people understand the importance of good record keeping for their financial well-being and for their businesses. Without any further delay, I present to you Ms. Carmen Acevedo Adams. Ms. Adams?
Thank you. Good morning, everyone, and welcome to the fifth and final installment of this workshop. I am really happy to have everyone here. And we were going to start with just doing two quick short poll questions just to get to know you a little bit better, so you get to know who I have as an audience today. Mary Jo? So the first question is, are you in business? Are you a business owner rather than are you a bookkeeper?
Okay, and for the people that are watching us on Facebook, you're missing out on the opportunity to participate in this poll. But we will end the poll in about 5 seconds. And the poll is closing now. And I'm sharing the results with you. And we have 54% of the people not in business. 46% of you are in business.
Okay, interesting. Okay, so the other poll question was, where are you located? Was that it, Mary Jo?
Where are you located? Well, we were going to do that later, but we can do that now. We'll do that one later. We'll ask now how many of you attended previous sessions.
Right. Okay.
Okay, let's see. Where is that question? Okay, and I'm launching that poll now, and you can answer more than one.
Were you able to attend any of the previous sessions? And if for any reason you were not, these sessions have been recorded and they are being posted in the SBDC YouTube site as well as their Facebook site. So you can access any of these at any time. And I encourage you to do so. They are for your benefit, especially as a business owner. It was kind of the audience we were trying to reach. But any person that, keeping in mind that this is a basic bookkeeping, you're not going to be an expert when you finish with this, but you have a rounded understanding of what bookkeeping is all about. And that was the intention of this series. Okay.
Okay, and we'll give you another couple of seconds because I know there were 4 choices from the previous sessions. The first session was understanding basic accounting terminology. The second session was accounting methods, keeping track of your business. The third session was understanding the balance sheet and other financial statements. The fourth session was payroll accounting and terminology, end of period procedures. And those were the previous sessions. So I'm ending the poll now. And based on those poll results, 57% of the audience attended the first session, 70% attended the second session, 78% attended the third session, and 74% attended the fourth session. So that's excellent attendance.
Excellent. Yes, excellent. Okay, well, I'm really happy to see that, and I hope that this last session proves to be just as beneficial for you. And let's go into it. So we're going to talk about financial planning, budgeting, budgeting and control. I apologize. Auditing, and then we're just going to do a quick wrap up. So for many of us who have tried to use a budget at home to curtail that internet shopping obsession, you have either discovered how difficult it is to stay within a budget or how much easier it is to stay within your means if you use a budget. And I like this quote by William Feather that says, a budget tells us what we can't afford, but it doesn't keep you from buying it. So we're going to keep that in mind, what a budget is meant to do, but it's only as good as if we put it into practice, okay? Keep that in mind. So reasons for budgeting. It gives you a plan of action. It sets financial goals. And also it helps you to evaluate your performance or the performance of your company. So basically it's a plan of action with dollar amounts attached. There are different types of budgets that can be set up. A cash budget, sales budget, production budget, department budgets, master budget, capital expenditures budget. We're going to talk a little bit more about different types of budgets later on, okay? Some budgets are designed to be flexible budgets, while others are static budgets. And we are also going to go more in depth into what does it mean, a flexible budget versus a static budget. So what is a budget? It's a financial plan for future activities. The budgets are used in business often include a sales revenues budget, detailed by products and services, production budgets, budgets for each department in the company, cash budget, capital expenditures budget, and others. The combination of all of these budgets is referred to as a company's master budget or profit plan. You may be a small company. Maybe you don't need all these different little types of budgets for every department because maybe there are not that many departments. But so just concentrate on what budget is applicable to you or your company. Budgets help management decide which activities it will undertake and how the company's resources will be used. So a budget, you're going to take what your revenues are, and you're going to take what your expenses are, and then you're going to compare and see what the bottom line is giving you. And that is going to help you to make decisions. If the budgeted income statement and balance sheet coming out of the master budget are not acceptable, management can make the needed changes before the year actually begins. Budgets can also assist in controlling actual cost, because then managers realize that the cost of their activities will be compared to the budget. So we're talking in a bigger production, a bigger company that has all these different departments. And this is where it's beneficial for a company to set budgets by department, because it gives the department heads a rule of conduct, so to speak, to go through for the year. And they know that they have a certain budget, and they want to make sure that the way that that department handles their business stays within that budget, because it's going to make them look good, right? And it's going to be good for the company. The differences between the actual amounts occurring and the budgeted amounts are known as variances. So variances is differences, changes, you can almost say what is wrong or what is right. A variance will show all of this. They can also signal some new problems that need management's attention. So let's talk a little bit about creating a budget. So to create a budget, step one, you want to gather all your financial statements. Very, very important that you use past financial statements, because this is going to tell you what was being done, how things were being disbursed, what was the income coming, what was the expenses going out. So you want to then have a list of your income sources, and then also a list of all your expenses. Then you're going to determine what's a fixed and what's a variable expense. What's a fixed expense? A fixed expense would be something like rent. That is going to be the same amount month after month, month after month, for that year or for whatever period of time you're budgeting for. So that's a fixed expense. A variable expense, WAPA bill, say utilities. God knows how it changes from month to month. So that is something that is variable, and you would want to make accommodations for that within the budget. Then you're going to put your total monthly income and expenses, and then you're going to make adjustments as needed. Okay, so you basically, a budget is all your incomings and all your outflows. Okay, and you're going to compare these from what was at the beginning, and then at the end of that period that you're budgeting for, then you want to compare how it looks, the actual versus the budgeted, and it's going to give you a clear picture of what's happening in the business. So it's important that we recognize the differences, and keep in mind that they rarely would match what you budgeted to what is actually happening. If you have that, wow, you know, that's a kudos for you, but it's not going to happen very often, or if ever. So that's why it's important that it's reviewed and updated. Once you receive that last report of that budget for that period that you have budgeted for, then you want to review it and see where things went out of whack, so to speak, where you went out of the budget so much, or maybe when it was not so much and you can live with it, then you need to review the budget itself. The success of every budget comes down to one simple question: are you spending less than you're earning? Okay, and this is also going to determine the outcome of your business. Okay, how financially stable or how long your business is going to be around for. Creating a budget can be intimidating at first, but keeping this principle in mind can help you to take control of your spending. So you want to define your budget objectives. You want to, okay, what is it that you want to know the budget for? Maybe one particular department of your agency. Then you want to access all the historical and the actual data that you have for that department. Then you're going to develop a base budget. Okay, so in the last year, we are doing a financial statement. In the last year, we spent this much for rent, we spent this much for utilities, we spent this much for marketing, we spend this much for taking out customers, say to dinner or whatever. That's all part of advertising. And this is what we made, okay? So let's see how that compares to the next 3 months, and let's see how that works out. Then you access your data and you prepare the budget. So you then review that budget and you refine it if necessary. You post and report results. It's very important that you share that data that you have acquired at the end of that period with the persons that are involved in those areas that you are setting that budget for. And then also very important that you monitor your progress and you amend as needed. That's the whole purpose of a budget, okay? It's not something to be written in stone. It's something that is going to give you a basis for you to take further action in the future. So now let's talk about fixed versus flexible budget. So a fixed budget is a budget that's does not change or flex for increases or decreases in volume. And volume here could be sales, unit produced, or some other activity, whatever activity you want to ascribe that to. A fixed budget is also known as a static budget. So let's see an example to illustrate a fixed budget. Let's assume that a company pays 5% sales commission on all of its sales. If the company prepares a fixed budget and it is projecting sales of 1 million, the budget for sales commissions will be fixed at 50,000. If the actual sales end up being only 900,000, not 1 million, because it's a fixed budget, the budget for sales commission will remain unchanged at the fixed amount of 50,000. So think about that. If the actual sales are 1,100,000, the budget for sales commission will still be 50,000. Now, if you have a flexible budget, which is a budget that adjusts or flexes with changes that happen in volume or activity, it's more sophisticated and useful than the static budget. The static budget amounts do not change. They remain unchanged from the amounts established at the time that the static budget was prepared and approved. So let's go back to that same example we used before. Had the company prepared a flexible budget instead of a fixed budget, the budget for sales commission would be expressed as 5% of sales, okay? Not 5% on all sales, 5%, and we're gonna say, before they said 5% on sales, and we're projecting $1 million in sales, so this is what we're putting aside, 50,000. But now we're saying we are going to be budgeting 5% of sales. That means that the budget for sales commissions will be 50,000 only when sales are reaching $1 million. If the company has actual sales of 900,000, the budget for sales commission will then flex, okay? And it will be $45,000, which is 5% of 900,000. If the actual sales are 1,100,000, the budget for sales commissions will be $55,000. So it flexes or adjusts to the circumstances. There may be companies that because of their makeup or maybe because of what their industry is, a fixed budget is what is better for them. But for most companies, flexible budget would be something that is, recommended. So here, just to kind of bring home the point, a static budget not adjusted for actual level of production. A flexible budget can be adjusted to various activity levels. So which one is best for use in your performance analysis? Something to keep in mind. So let's review quickly what we talked about budgets. And I'm putting up the questions because we have a lot of information today and we kind of want to, just go through it. But you will have a copy of this so you will be able to review it. What can budgets project? Cash inflow only, cash outflow only, cash inflow and outflow, or none of the above? Of course, budgets can project cash inflow or should project inflow and outflow and they can project other items in the balance sheet as well. Okay. What can a budget help a business control? Not the loss of employees, not the loss of customers. It can help you control the spending, not even the revenues earned, because that's not what a budget will do. But it will help you to control how that income, that is, what that revenue is used to the benefit of your company. So understanding what comes into a business as well as what must go out can give the business a clear financial picture, which can help avoid overspending. Maybe in the first 3 months of the year, you spent $10,000 in marketing. Then after those first 3 months, you want to look at the budget and look at the actuals and see how well those $10,000 served you. How much business has those $10,000 brought in? Did it bring in a lot of business? Well, then maybe you might say, okay, so let's do it for another three months. Did it hardly bring any business? Were those $10,000 well spent? Well, maybe not in the way that they were actually spent. Maybe you need to revisit how you want to do that advertising. Maybe you want to revisit the amount of money you're putting into advertising and use that other money that you are saving into something better for the company. So those are the kind of questions that the kind of information it should give you. What is the best reference when creating a budget? The company's past financial statements, not other companies, not what your employees tell you, or any current final statements. You want to compare it to what was happening before and how it was done before. So only the information of the company in question is relevant to the budget, and verbal input may be helpful, but it's not a reliable source. Okay. What should be done if income equals more than its expenses? The excess should be saved. I have a quote here from Elizabeth Warren, and she gave a formula for a budget. It's called balanced money formula. And the formula she gave was spend 50% of your earnings on needs, spend 30% of any wants you may have, and allocate the remaining 20% of your income for savings or debt reduction. So that helps you to have a healthy, if it's a personal budget that you're working on, helps you to have a healthy bank account. If it's a business, it helps you to have a business that is going to be ready for growth because it's going to have the capital behind it when the opportunity shows up. Okay, so keep that in mind. What should be done if income, I'm sorry, we considered that. So if there is excess, it should be saved for the future event of the expenses exceeding the income, or other things that may come up that you then will be in the position to be able to accomplish. What is a budget? The amount planned for ahead of time, okay? Not the amount actually realized, not both. The budget is the amount planned for ahead of time and the amount that is realized, okay? So you have what was and what is, and the end result is what you want to look at. What is an actual expense? The amount planned for ahead of time? No, the amount that was actually realized. So maybe you're saying, we are thinking that based on the last 12 months, our utility bill should stay within this range for the next 12 months. And then at the end of the 12 months, you see these kind of, fluctuations, and it's gonna help you to budget better, because there's gonna be, well, we don't see too many of these, but we see a lot of these, a lot of going up, not too many going down, but it's gonna help you to budget better for utilities, okay? Utilities could be also telephone, let's say internet use. Let's say your business is growing and you need to have more volumes, but then you need to maybe up your internet expense because you need more, okay? So things like these. Okay, so I hope that helps you with budgeting. It's an important part of your business growth. It's something that is recommended you do often, and it could be for a year, it could be for 3 months, it could be for 1 month, it could be for a week. Depends on what is happening with your business at any given time that you want to know how your money is being used within your business, okay? Let's talk about auditing. This is a bad word for a lot of people, but it shouldn't be. For this unit, we're going to be discussing what an audit is, when and why you should audit, as well as types of audits are internal or external audits. I hope you've enjoyed learning this vital information, and we're sure you're going to find much use for it in the near future. So what's an audit? The general definition of an audit is an evaluation of a person, system, or process. In business, an audit is an examination of the accumulation of financial records in order to determine if such records and/or financial statements are in accordance with the rules of generally accepted accounting principles. That's also known as the GAAP, okay? So generally accepted accounting principles. Interesting point. Audited financial statements means financial statements that bear the report of an independent auditors attesting to the financial statements' fairness and compliance with generally accepted accounting principles. An auditor is the person that examines, collects evidence, and evaluates before making a judgment call via an audit report. So an audit is someone with a very strong magnifying glass looking at everything that is going. And again, an audit could be just for a department of your business, could be for your whole business, could be for your business and your personal records. And as we are going to see, an audit can be something that you generate, that you start for your own business, or something that is started by somebody else, an external agency. Any questions? I'm sorry, I forgot to ask that. And I guess none, because I haven't seen any raising of hands. Why would you audit? So we talked about internal and external. Internal is within the company, and it improves operations. And I found this very funny here. It says, oh yeah, then we mentioned that the audit would include your internet history. Sometimes we need to do internal audits, and we need to find out how our employees are using the business resources. And many times we get some really interesting scenarios there. So when an audit is doing internally, it will encompass everything in the company for that particular audit, okay? An external is an outside company or an independent entity. And many times this is what happens. You are caught unawares and you try to, hide things that you didn't want seen. So when we have a business and we're making decisions for that business, it's something that we should always keep in mind. What happens if there is an audit of my business? What would it say? So you want always to be able to explain what is going on in your business. An effective audit helps organizations achieve goals and objectives by measuring overall performance and productivity, as detected in transactions and business records. Further, an audit protects an organization from financial misstatements, presenting a reliable health picture of the organization to the markets. Fraud protection is a benefit of audits, achieved through internal controls that prevent and detect accounting irregularities. So there is a reason for, that's one reason that you can decide to do an internal audit. Maybe you're asking for financial statements and all of a sudden you see a department in your company that there's a lot of things going out, or all of a sudden you have a lot of expenses. 5 laptops were bought at the beginning of the year and it's the middle of the year and they are asking for 5 more, but your staff hasn't changed. You still have the same people, the same amount of people. Why is that happening? Okay, maybe an audit is required and you'll be surprised at some of the things that you share. Are there any questions, Mary Jo? No, not hearing from anyone. Okay, good, thank you. So strengthening the financial integrity of an organization through an audit reduces risk and the cost of capital. An audit provides investors and shareholders confidence by providing trusted information concerning financial statements and how well the organization is run. So when you have an audit that, and it's one that you generated yourself, you requested it, done by an external company, which is done many times, especially when companies are big and they are maybe trying to lure investors. They have an audit, then they have someone outside of the company saying, yeah, they're legit. You know, this is what's happening. They're giving you this financial statement. It looks really good. We checked everything. It is good. So audits are not always bad. Rarely ever are they bad, and we don't want them to be bad. They can actually work for you, okay? An audit inspects internal control systems, ensuring that they're sufficiently strong and working properly. In addition, an audit benefits accountants and tax collectors by addressing accounting problems and offering up-to-date information on techniques, rules, and regulations. Finally, financial analysts should use an audit to determine the value of an organization's shares. So it might even be your accountant that requests an audit be done, okay? And it's to their benefit as well. So audits are looking into all of your systems, looking into how things are working, how things are moving, what is the flow within your system, where is the backup to that flow. So it can be beneficial if you have questions about anything that is going on in your business. Maybe your business is growing exponentially. It's like right after Maria, many businesses grew really quickly because there was so much demand for certain products or services. And you get lost in all of that. So it's good to take a minute back and do an audit of your company. Okay, wait a minute. So what happened last year? What is, maybe you are at the end of the year and you give all your information to your accountant, and your you worked all this different jobs and you expected to see all this money and it's not there. That's a good time to do an audit. Okay.
Question.
Yes.
How often should audits be conducted?
That's the decision of the company. It may be once a year, it may be once every 3 months, it may be every half of the year. You decide what works best for your company. That is an internal decision to be made, and hopefully only internal. External, well, once a year, we know who is looking over our shoulders. Big Brother is always looking over our shoulders. We're going to talk about that in a little bit, and they might decide, to do an audit. 4 phases of an audit cycle. We have 5 because one of these we can lump into 1. So you're preparing for an audit. So planning and preparation. Audit preparation consists of planning everything that is done in advance by interested parties, such as the auditor, the lead auditor, the client, and the audit program manager, to ensure that the audit complies with the client's objective. This stage of an audit begins with the decision to conduct the audit and ends when the audit itself is given. So this is not helter-skelter. Anybody can come and look at your business. Anybody can come and look at your records. Everybody can see your business. No, that's not the way that a professional audit is conducted. You sit down with the company that you have hired to conduct that audit for you, and you state what you want audited, and then they will tell you how they're going to go about it. This is provided to you in a written form. You have to sign and agree to that. And then at the end of that audit, they have to also provide you with a written report on what they found. Okay, so this is a legal arrangement that has to be entered into. So it should not be, and it should be someone that is qualified to do that audit, by the way. You need to make sure of that because they need to know what they're doing and what they're looking for. Did I see a question? No?
Yes. Is there a recommended amount of time an audit can be conducted? Amount of times?
I don't understand the question. What do you mean by amount of time? How long it's going to take for the audit?
Ms. George, can you
No,
clarify for us, please?
yes. No, not the amount of, thank you, Mary Jo. Just the amount of times in terms of once a year or as needed, or as you see a problem that you think you need to have addressed, an audit
The
should be
last two.
recommended. That's
Yeah, the last two that you just said, as needed or as you see a problem that needs to be addressed. Yes.
okay. Thank
Mhm.
you.
Mhm. And or maybe once a year because you just want to see, you know, how everything is running in your company. But when you're doing internal audits, as needed, as needed. Okay, the execution of the audit is often called the field work. It is a data gathering portion of the audit and covers the time period from the arrival at the audit location up to the exit meeting. So it can be from, depending on what is being audited, how much activity there was, it can be anything from a week, 2 days, 3 months, 6 months, a year. It consists of multiple activities, including on-site audit management, meeting with the auditee, understanding the process and system controls, and verifying that these controls work, communicating among team members, and communicating with the auditee. So if you're doing an internal audit, you hire an external company to do that, that person is going to have to understand your company before they can audit it. So they will probably just kind of wander around for a little while, see what everybody's doing, ask questions, yeah, how you do this and how often, you know, that kind of thing, because they want to get a rounded picture of what they're auditing. And then and only then can they really produce a correct audit, because they understand the process and how it should, what it should be versus what they might find, okay? And again, assuming that you're doing an audit because something is wrong. You could just be doing an audit just to certify or reassure yourself that things are being done correctly. Did I see another question? No? Okay.
Yes.
Audit, yes,
How far back in years should an audit cover if a company has never done one before?
You should at least go 1 year back. Okay, at least 1 year back, because that's what you're doing now. That is what you did 5 years ago. You know, you did it 5 years ago. It's gone. It's done. There's not much you can do about that. But you should at least use 1 year, maybe 2 or 3 at the most. I would say. Okay, but definitely at least 1 year back. So audit reporting. The purpose of the audit report at the end of the audit is to communicate the results of the investigation. The report should provide correct and clear data that will be effective as management aid in addressing important organizational issues. The audit, so if you get an audit report and you don't understand it, then you have the right to sit that person down and say, you need to write this in a way that I understand what it is that you're saying. What is it, what exactly, put it as clear as possible, okay? Because that's the whole purpose of the audit. The audit process may end when the report is issued by the lead auditor or after follow-up actions are completed. So maybe in the audit report, you have certain questions, but how did you reach to that conclusion? Why was it there? And maybe the auditor cannot fully answer. They may have to go back and do a little more investigation, more auditing, more looking into, more digging, and so that they can provide you with the answer. So remember, this is something, audits are not cheap. When you hire external organizations to come and audit your company, it's not cheap. So you want to make sure that you get your money's worth, okay? You want to make sure that that report they're giving you is going to be useful to you in making the decisions that you have to make and in getting the knowledge of how the business is working. So one, it has to be clear to you, and secondly, it has to be thorough for that particular part of your business or your whole business that you requested audited. Audit follow-up and closure. The audit is completed when all the planned audit activities have been carried out or otherwise agreed with the audit client. Verification of follow-up actions may be part of subsequent audit. So if now you say, well, wait a minute, what about this other unit? How is that interacting? Well, that's another audit. So you're going to be charged over again. So when you are in step 1 of planning and preparation, you want to be clear as to what you want that audit to encompass, okay? And remember, that's a legal document that you're entering, a legal agreement that you're entering into. So you want to make sure that it's as clear as possible. Question? Mm-hmm.
Should a company notify its employees that an audit is being conducted?
That's a good question. I have seen examples of where they did because they needed the employees to cooperate with the auditor. Maybe just the management part of their business and not necessarily the employees. It depends on what is being audited. And there are times when no, because maybe what you are suspecting is an employee doing something. And if you forewarn them that a person is going to audit, then, you know, there goes your results. So it depends on what the purpose of the audit, I would say. Okay, and maybe then it might be that you only alert those that need on a need to know basis, like they say, those that really need to know about it. So that would be my answer. It depends on the purpose of the audit, okay, and the need for that person to know it. Okay, so we talked about internal, external audits, ones that you maybe set up for your own company. And then there are those that are set up by somebody else because they want to know about your business and red flags have come up, okay? And of course, we're talking about Big Brother, Internal Revenue Service. So an audit by IRS is a review or examination of an organization or individual's accounts and financial information to ensure that the information reported is correct according to the tax laws and to verify the reported amount of tax is correct. Now, notice it says the selection of an audit does not always suggest there's a problem. So don't freak out if you get a letter saying you've been selected for an audit, okay? Especially if you know that your records are spick and span, which is why I always tell you, make sure that your records match what is happening in your business. The IRS manages audits either by mail or through an in-person interview to review your records. The interview may be at an IRS office, the office audit, or at a taxpayer's home, place of business, or an accountant's office, which is called a field audit. Remember, you will be contacted initially by mail. The IRS will provide all contact information and instructions in the letter you will receive. The IRS will provide you with a written request for the specific documents they want to see. So again, scammers all over the place. Somebody may say, we're from the IRS, we need to audit, we need you to send us this and this and this. They're always going to also provide you for a phone number, a contact. And anybody from any agency or any person that is asking you for very specific information, very security-minded information, you need to be wary about that. For example, one of my clients got a call the other day got a notice and it said SAM, okay? And SAM is the federal registry that you do for your business and whatnot, for federal contracts and whatever. You want to be registered with SAM. So they said, oh, your SAM is expiring. There's a charge of $399, and so that we can renew everything for you. And my client sort of freaked out and paid the $399, and then they received an email saying, okay, someone is gonna get in contact with you to start the procedure. So then they funneled the person through me, right? And I said, let me talk to that person. And I I said, okay, great. We started talking, very nice. And then the person asked me for the password to the SAM. And that immediately is a red flag. Why do you need that password? You are Sam, or are you Sam? So that then the conversation continued, and it was just a company that is looking for business. You don't have to pay for renewing your SAM certification. That's another red flag right there. So it was someone, you know, it's a company that does help, but you don't need to have them. You don't need to pay $3.99, and you definitely don't need to be giving out your personal information in that way. So just because it says IRS, be careful. It doesn't mean, I mean, there's so many scammers out there. You want to make sure that you contact them and that you verify that, yes, you are being audited, and yes, they sent you this information, and yes, this is what they need. And notice that sometimes they're just going to ask you for certain specific documents. You don't have to open your whole life to them unless they ask you to, okay? Which hopefully they won't. Any questions?
Yes, ma'am. What is the statute of limitations for an audit?
I don't know. I don't know. I would have to look that up.
Okay. And somebody asked what the SAM stands for, and that stands for System of Award Management. Anybody that wants to do business with the federal government, if you want a grant, if you want to apply for a contract, you need to be registered in the System for Award Management. And that starts with having a DUNS number from Dun and Bradstreet, and the SBDC can assist you with those processes. Right,
exactly. And it's something that you can do yourself, or have your bookkeeper do for you, have your accountant help you with. Yeah. You certainly don't, unless you are a business that has so many different types of services that the federal government can use, and then it goes into your NICS codes and, you know, knowing all of that, then maybe you can use the help of someone that is more knowledgeable in that subject. And you may want to, you know, say, okay, the $3.99 is something that I can dispense with, but you don't have to. That's what I'm you know, you don't. It's something that you can do yourself.
Right. It's like local. Like here locally, people will register your business for you for a fee, but you can register your own business. You don't have to pay the extra $200 or $300 to register your business with the local government. You just pay whatever that fee is and do the work yourself. So it's another business trying to generate business. And
right.
So you should be leery, because one, you can do those things at no cost. Somebody said in the chat it's free, and two, the Virgin Islands Small Business Development Center can help you do that at no cost, and three, the process does take time, so it's not something you can do overnight.
Right. So how far back can the IRS go to audit my return? Generally, the IRS can include returns filed within the last 3 years in an audit. If we, this I took from the IRS, so when it says if the IRS identify a substantial error, they may add additional years. They usually don't go back more than the last 6 years for an audit.
But Carmen, if you file your return late, it's those years from the date you file that return.
The years going back?
Yeah,
6
so
years
if you're filing your 2016 return in 2020, then it goes back that far.
Okay. And they'll probably red flag you to look at 17, 18, 19, and 20 as well. So keep that in mind. So sometimes without realizing it, we might, you know, red flag ourselves. So we want to be as compliant as possible by filing things on time, by what we put on our returns. You always want to have backup documentation to that. And that's something that I try to tell my clients. Whenever you're filing an end of the year report, you have that in a separate folder. Everything that you put in that report, there should be a copy of that you should be able to show. And it's good practice. One, it helps to remind you, okay, oh, this is what we did. Oh, okay, this is how, it kind of brings back. And secondly, if you're ever audited, you have that information ready, and that willingness to show and open also gives them, lets them know, okay, this, this person, this business should be okay, hopefully. How long does an audit take? The length varies depending on the type of audit, the complexity of the issues, the availability of information requested, the availability of both parties for scheduling meetings, and your agreement or disagreement with the findings. So, point taken here, you can disagree with their findings. You can say, no, that's not the way it is. No, that's not, that's not right. I need to have this reviewed by somebody else, or I can show you why it's not right. So you are given that right to decide to fight their findings. If you have any questions, you can go to www.irs.gov, businesses, small business, self-employed, IRS audits, $ conduct, okay? It tells you a lot more there, a lot more information about audits in there. Did I see a question, Mary Jo?
Yes, ma'am.
Mm-hmm.
What are the best characteristics a small business owner must look for when seeking the professional services of a bookkeeper if they believe they need to hire one?
Boy, that's a loaded question. Okay, so maybe you were not here for the previous 4. I talked about that in my earlier workshops. The person should know, again, a bookkeeper is, remember, one of the things that I stated was a bookkeeper is not an accountant. Many times companies hire bookkeepers, okay? And then they expect that bookkeeper to have the knowledge of an accountant that went 6 or 8 years to school to study accounting. We are not accountants. Bookkeepers are familiar with the way things should be posted. They should know what an accounts receivable is. They should know what an accounts payable is. They should know what an expense is, what constitutes revenue. They should know how to do, and again, we're talking at a full-fledged bookkeeper, okay? You may have someone just doing your accounts payable, and that person will tell you, I'm an accounts payable bookkeeper, because they know everything about accounts payable. And maybe they're not they don't know how to do payroll. So, or you may have just a bookkeeper to do payroll and not have to deal with anything else in your company. So it depends. But a rounded bookkeeper, say you're a small company and you're hiring one person to do everything, they need to not only be versed in these things, but keep up to date with the laws as they change. Okay, and lately we've seen a lot of changes, and because of COVID-19, there have been additional things that have come out, additional benefits, additional expenses for the employer, things like that. So a good bookkeeper needs to be keep herself or himself up to date with that. They should be able to be doing reconciliation of your accounts on time, so that you, at any given time, you ask for a balance sheet, you ask for a P&L, an income statement, that should reflect where your company is at the time that you ask for it. They should be able to be looking out for your company by looking at an accounts payable when those invoices are being received. They're not just saying, oh, invoice done, done. No, they should know your business to say, wait a minute, they're charging you here for this much for this, but last month they charged you less, or they are charging you for 3, but we only received 2. So it's that kind of involvement that a bookkeeper should have with your business, so that they're looking out for your best interest. And I hope I don't get any flack later from other bookkeepers, but this is what a bookkeeper should be doing for a business. So as a bookkeeper, I am vested in that company, not just because they're paying me, but because I am wanting to make sure that their records are right, their records are straight, that they're doing things right. There may be times that as a bookkeeper, you have to tell your employer, no, I don't think this should be paid, or no, I don't think you should buy that. look where we are right now. We're not that healthy financially, you know, so you should have, a bookkeeper should be keeping this kind of information with them, and should be able to provide that kind of feedback to the, if you have a bookkeeper that tells you yes to everything, no, not a good bookkeeper. As a bookkeeper, there are times that you have to say, no, that's not the right way of doing it. No, you need to pay this tax because it's going to hurt you later. It's going to come back and hit you with penalty and interest. I don't care what doesn't need to be paid. Let's pay this. That's the kind, you know, at least that's the kind of bookkeeper I am. Let's put it that way. And I think that I think that I am always looking out for the benefit of my employers, of my clients. So, but it should be, it depends on, again, keep in mind, are you hiring somebody just to do your payroll? Well, that person should really know how to do payroll, how to do the reports, how to pay those taxes, how to, and payroll, mind you, is not HR, it's not human resources. Now, but sometimes you want your bookkeeper to also be an HR person. So, you know, we have to, and then you're not willing to pay for those services. You just want to pay a bookkeeper $12 an hour. I don't think so. Not if you're going to ask all of that out of a bookkeeper. So those are the things that you pay what you get what you pay for. And again, I'm getting preachy here, and I apologize, but I'm basing it on my 25 or 30 years of experience that I've had doing this. I had a client once that told me, I can only pay you for 10 hours a week, and I'm going to pay you at this amount. And at the time I needed a job, so I said, okay. But then every other day he wanted something additional. Every other day he wanted, so my hours started growing from 10 to 12 to 15 to 20, but he still didn't want to add to the payment. So if it was you, you wouldn't accept that. So don't dish it out to somebody else. If you have a bookkeeper and you want a good bookkeeper, pay that person, because that person is going to be looking out for the financial health of your company. If you have a good relationship with them, and then it's up to you. That was something else that we talked about earlier. It's your responsibility, it's your business. So it's up to you to ask that bookkeeper to make sure that that bookkeeper is doing their job. Give me a financial statement. Why does this say this? Why does this look funny? What is happening here? You gave me this total. What does that total represent? All of that information, they should be able to give it to you if they're doing their job right and they know what they're doing. So it's a give and take, okay? But you would want to have a good bookkeeper for your business, and that bookkeeper should be someone that is looking out for your best interest and your business best interest. End of preaching. I hope that answered the question. Did I see any other questions?
Yes, it raised more questions. What is the range of payment for hiring a bookkeeper?
Anywhere, it depends again. There's not a set, and nothing is set in concrete. It depends what type of bookkeeper are you just hiring somebody to do your payroll? Then, there's a range for that. Are you hiring somebody to do all your books, everything from A to Z? Then of course there's a different range from that. I have clients that hire me and then they say, would you train this person? So hello, you're asking me to train a person to take over my job. So I will train them, but then it's going to be a different rate. So you see, if you have any misgivings about what they're charging you, check with other companies and see what they're paying the bookkeepers. But if you feel that this person and that this, I'm just saying this as an example, okay? I'm not kind of giving me a boost. But I've had people call me out of the blue. I heard of you. I want you as my bookkeeper. But it's because it's the quality of the job that you give to your business owners. And then I had a client that I couldn't. If I were to take that client, I would be squeezing my life. And he said, no, I need you. You're the person that I need. And I said, okay, well, then you're going to have to, I thought to myself, you're going to have to pay for it. So I said, if I ask you, I'm going to ask him this sum that I don't think he's going to want to pay, and I'm going to get him out of my life. And he said, no problem. I want you. I need to. So you see, it depends on what you want to get out of that person. I'm not saying pay exorbitant prices. I'm not saying that. I'm not advocating for that. And definitely, if you see that what you're paying for, you're not getting, then I don't recommend you keep that person. It's as simple as that. But if you want someone that is going to do, that delivers everything that they say they will deliver for you, then I would make sure to keep that person happy. That's all I can say. What's the other question, Mary Jo?
Well, they said for all of your books, so I said just keeping them happy is what.
No, but what I'm, you have to, a bookkeeper is a central figure in your business, because they are the ones that are seeing everything that's coming in and everything that is going out. They are the ones that are keeping tab of the going ins and outs, all the time. So it's an important, and then again, that's why I keep emphasizing, as business owners, you need to make sure you understand what their roles are, and you need to make sure that they're doing them. Because if they're not, then there's money wasted that you're spending right there. So you need to have someone that is going to do that for you, okay? That you can rely on, and that is going to have your back in that part of the business. And a bookkeeper should do that, and an accountant also should do that. At the end of the year, an accountant is a good person to ask, how is the bookkeeper working out? What kind of reports are they giving you? And then you can tell them, the accountant can tell you, well, she's not, I'm not really getting what I need. I have to ask for it 2 and 3 times. Well, then that's a time to sit down with your bookkeeper and reassess, the work that he or she is doing, and whether there needs to be changes. But again, it's your responsibility. You are the owner. It's your company. So you can't then chuck it, oh, it was my bookkeeper who did that. But were you overseeing your bookkeeper? And that's why this course was meant. I was hoping that a lot of business owners would take it, and they have, because it's meant to give you an understanding of what, as a bookkeeper should be doing, what are the things they should know, and therefore what kind of product they're supposed to be giving to you. Any other questions?
Well, somebody made a statement, financial and professional ethics are critical elements of a good bookkeeper.
Thank you.
Okay.
Thank you.
Now, is there a figure for us? Is there a figure for a starting pay for someone to do just payroll, accounts payable, and accounts receivable? I don't know if they mean each one of those or all 3 of those together.
Okay, so if you go to the Department of Labor, they'll tell you right now what is the minimum wage, okay? And what kind of job markets fall under that minimum wage. They're able to give you a table. Mm-hmm. And if not, you can Google that. It's probably going to give you stateside information as well. But you have to take into consideration, we live on an island. Your field of availability is restricted. And then again, you have, for us as bookkeepers, there are now lots of firms from the States that are willing to do your books online, and they may be even offering cheaper services. So then you want to know, well, do I want to trust that? Do I want to do it like that? Is it okay? What they're doing is small. So there's a lot of things to take into consideration. A bookkeeper who's doing just payroll, not less, I would say, and I hope that I'm not wrong, but not less than $15 an hour, just payroll, okay? And to me, that's the bottom line. That would be like the bottom line. And then you can, as you add things that person is doing, that person is responsible for, then, you would have to add on to that. It's certainly not what I'm making. Let me put it that way. Okay.
Cool.
So different types of audits. We talked about the internal audit. We talked about the external audit. We talked about the IRS tax audit. There's operational audit, compliance audit, information systems audit, payroll audit, pay audit. So basically you can audit anything that you feel needs closer inspection, that you feel needs a closer look at in your business. So let's do some review questions. Audits are done in order to be in compliance with what or whom? And the answer is the GAAP, which stands for Generally Accepted Accounting Principles. Remember, we talked about that earlier. Not FEMA, not FMLA, no AHA, none of those. The GAAP, Generally Accepted Accounting Principles. What is a financial audit concerned with? It's concerned with financial records. Not employee, not anything else. It's concerned with financial records. As the name states, a financial audit is only concerned with the finances of a company. It seeks to uncover incidences of misstatements and or fraud. What does IRS stand for? Internal Revenue Service. It serves many functions. One of these functions may be to audit a company if it finds just cause. What is the first part of the audit mention? Is the report title. The audit parts include report title, report address, the introductory paragraph, the scope paragraph, opinion paragraph, and lastly, the signature of the CPA firm that is doing the audit. Remember, we talked about you're supposed to be getting that audit report. You're supposed to agree with that audit report. And if you have questions, you have the right to voice those questions and have those questions addressed. What type of audit is conducted by someone in the company? And that is an internal audit. So there are two types, internal and external. Internal audits are conducted by someone from within the company or someone the company hires. External audits are conducted by third-party agencies. Who will conduct an internal audit for a company? A certified internal auditor. Not the administrative assistant, not the telephone representative, not the bookkeeper. Certified internal auditor. Certified internal auditors are credentialed to perform this task. There are things that they're going to look for, specific things. They know what are red flags within the financials of a company. They know what to look for. What type of audit is conducted by a third-party agency? An external, okay? We talked internal and external. External audits are conducted by third-party agencies. How often is an external audit conducted? Periodically. Periodical external audit is generally sufficient. Again, you determine that as the owner or the head of your company, whether it's a board or you know, however, they determine how often these are to be conducted. So this is the end of our course today. I hope that it helped. What we considered before, we talked about terminology. That was our first part. We talked about cash and accrual. What does that represent in your bookkeeping or accounting? Journal and the journal ledger. We talked about payroll and everything that encompasses. The reports, all the forms, when they are due, how often do you do them, all of that. What taxes should we take out? What forms do we need the employee to, what forms do we need to have on file that IRS and Homeland Security demands that you have on file? We talked about that. Planning, budgeting, and control, we talked about today, and auditing. Do I see questions?
I don't see any questions, but if you guys can hold on for our last couple of poll questions before you leave, that would be wonderful. They said excellent and thank you.
Thank you. So these are some of the things, some of the terms that we discussed thoroughly. Okay, we talked about what is a balance sheet, what are liabilities, equity, what is an income statement, when do you need one, what should be on an income statement, that what kind of information, what does the information there tell you about your business? What is a capital statement, revenue, cost of goods sales, cost of goods sold? What is an accounting period, accounts receivables, payables, depreciation, trial balance, and all of these others. All of this we considered in the 4 previous workshops that we had. So that's why I encourage you, if you have any questions on these, go back to the website, go back to YouTube or Facebook, and you should be able to see these workshops as well. And wrapping up, although this workshop is coming to a close, we hope that your journey to improve your basic bookkeeping skills is just beginning. Business owners, keep abreast of your business bookkeeping and record keeping. Ask for financial statements so that you can budget and plan for your business future by making informed decisions. Don't leave the success of your business to chance. Conduct internal audits so you have a clear picture of what is happening in your company and where you're headed. Ask your bookkeeper and/or your accountant questions, and more questions. They should be able to provide you those answers. May your business be successful. May your business continue to grow and have a long life. And that's the end of my presentation.
But don't go, there's more.
One thing I wanted to ask you is if you would share at least one thing that you got, those of you that were here from the beginning, those of you that have others, or even just today, one thing that you felt that you learned and that you feel good about, that you learned it, just put it in the chat for me, please. I really would appreciate hearing your comments on that, or reading your comments. And also, are there other topics that you would like SBDC to address and to maybe produce workshops like these for you that have to do with your business, things that are going to help you to do better in your business and to be a better business owner? So SBDC is here to help you. They're willing to provide you that assistance. It can be a one-on-one. You just need to get in touch with them, or it could be by means of a workshop like we did with this series, okay? One of the things that they are considering for next year is probably on QuickBooks. We're talking about that. It's something that is very useful for small business owners in particular. And again, my emphasis is always on you, the business owner, for you to know how these things should take place, how they need to work. And then also, if you want a well-rounded bookkeeper and you want to make sure that they're up to date with that, maybe you can also have them attend those sessions as well. But anything else that you think you would like to get a little more information on, put it in the chat for us, and we will take a close look at those and see how we can help you, okay? And remember that the SBDC is there. We are in St. Croix, we're in St. Thomas. We are a telephone call away right now because of COVID, but we're still, as eager and as anxious to help you with your business. And we did have 2 poll questions, right?
Yes, launching the poll question. The level of this presentation was too easy, just right, or too difficult? And the numbers are coming in. And we'll give you 2 more seconds and we'll take down the poll. And according to the majority of the audience, 97% think that the level of presentation was just right.
Wonderful.
And 3% think that the level was too easy.
Yeah, okay. So I know you know what you're doing. But I'm happy you're here anyway. That's wonderful. And one last question.
Then one last question is, where are you located? Because of the internet, you could be anywhere in the world. And we will close out the poll in a couple of seconds. And what we have is, ta-da, 50% of the people are from St. Croix,
Nice.
41% from St. Thomas, and 9% other.
Hey, good.
Okay, and let's see, you ask about them putting the topics in the chat and the one thing that they learned from today's, or from any of the sessions, what they learned.
And go back to those other sessions whenever you want to refresh your memory. It's so good that SBDC puts them up and keeps them there for a while. I don't know how long, Mary Jo, but they are there so you can review them. Or if there's something you want to share with the person that is keeping your books, you can then have them look at it and also go over the information. So that's awesome.
Okay,
Make use of these things that you have available to you. Remember, these things are totally free. All it takes is your commitment and your time. So make use of them.
I put the link to our Facebook page in the chat so you can get that and go back and watch what you missed or rewatch what you need more detail on. And the more you review, the more sense you'll make out of things, and then that'll probably better prepare you to ask your bookkeeper relevant questions about your business.
Don't give my phone number to your bookkeeper, so I don't want nobody cussing me out. You're probably giving them more work, but just remember, you are in charge of your company. So it's money that you're working hard for, and if you're dishing it out, make sure you're getting what you should be getting for your money. That's all I'm saying. Okay, and there are many excellent bookkeepers out there. I know many of them. So, and I'm sure I know them in St. Croix and in St. Thomas. So they are there. You just have to find them. Have a good rest of the week. I am really happy, and I really enjoyed working with you guys in this series. And I hope that you reach out to SBDC whenever you need anything concerning your business, any help with that. And have a good year. Have a good remainder of the year.
Okay, on behalf of the Virgin Islands Small Business Development Center and our state director, Mr. Ted Gutierrez, I want to thank you all for your attendance. Thank you for your support, and we look forward to providing seminars, webinars, and counseling services to you and your business now and into the future. All the best, and we'll see you in a couple of weeks when we start our next series on credit. Our next credit webinar series with First Bank starts on October the 9th. Credit webinar series. We'll see you then. Take care. Bye-bye.
That's it.
Okay, that's it.
Mary Jo, we are still live and recording.
Okay, recording. Come on, brain.